Good morning, everybody. Good morning to me. I've caught a nice little 3 hour nap there, a little bit late. Good morning. It is Thursday, May 2, just coming on 6 a.m., and I've really not got too much to add other than just going over what we've already gone over, but I do have an apology to make about yesterday. Uh, I'll go through the email here as we go through the 2 o'clock plus minus 1% levels. FOMC day means wait for it. They're dead flat range, as you saw. Your plus minus 1% levels already shared there with you in the email. The risk trade for today, which I typically don't like doing credit spreads on FOMC days, but this one, like I shared, had a reason and had a purpose to it. The bullish put spread, buying the 50-30, selling the 50-35s, $3 or better, which was there all day. Like I said, I shared my explanation as to why. We had that big drop there on Tuesday, and the technicals just didn't agree. And again, this is putting thoughts on paper, sending the email out as we go through. And here was the chart that I shared with you in the email talking about this view to the downside that I'm looking at here, where 1, 2, 3, and then a 4 coming up there, with a 3 really fitting right around that 50, 12, 32, pretty identical to the other drops that we had. And then a bounce at the time, like I threw in there, somewhere around that 50, 47, 50, 54 area for the bounce. Again, that was what we had going on there. And then as the day progressed, again, looking here at that same chart that was in the email, at 10 o'clock, we had that harder drop low. And although we hadn't gotten to that 50, 12, 32 yet, I was looking at adding, okay, yeah, we're going to get down to that 50, 12, 32. Let's look at where the bounce is, 50, 66, 68 for the 50 retracement of it. Fits pretty nicely for where, we should get a bounce considering it's FOMC day because, again, we're looking at that, how there's a very strong possibility that we could get up there into the 50, 60s. So as 50, 60s, SPY 504, very possible. Throughout there, how you were talking about that SPY 505 being the place to be. And as the windows will slowly, I'm having major Windows issues. Come back in here and go over these charts I'm talking about. I threw out that update there, and this was at 10 o'clock in the morning. And then I also threw out there just prior to it, talking about the safe edge data. And today, with the safe upper edge being 50.8132 plus 1% at 50.86, we hadn't hit that upper edge in 18 days. Today being 18, yesterday. October, there was 18. We broke it on day 19. August, we had 20. We broke it on day 21. And then sharing you the FOMC data. November, plus 1%. December, plus 1%. January, minus 1%. March, we missed plus 1% by 4 points. And again, we're super oversold on the 1 hour. We're entering on the 4 hours oversold. And that 1% being at 50.8605 and SPY 507, it all fit. And again, looking at how our chart projected, well, as you saw, we got right up to that 76.4 retracement. But once we got up to that 50.81, like you saw over there in the alert room, take the 0 DTE, call money off. 253. 253 was what time I was talking about it. We wound up bottoming when you look over at how well those 50-50 puts did. They bottomed at 1526, 3:26 in the afternoon, and I threw the alert out there at 3:20, which, call it an alert, don't call it an alert. It's 0 DTE FOMC day. You do what you got to do, and you guys have been around for many years and know that these days are chaos. Over on the spread room, 2:49 p.m., talking about take the money. The $4 credits that we were talking about, if you were selling the 50/50 puts, that's where you could get your $4 credit. Being that we were up over there at 50.90 plus, you damn well got some good fucking credit there. So again, bringing it all back, I want to apologize because I made a big mistake in the email yesterday. Sent out everything about this and discussed, continuing the pattern and the place, the projection that we have going into May. Highlights here where we're talking about here. You've got your email. You can reach through it. I didn't see this. I didn't see that. It's all in the QQQ. Again, coming down here on the QQQ projection. Imad, holy fuck, dude. $55,000 in under 30 minutes. So again, going through it, the summary part is where I'm coming to. I'm coming down to the middle portion of our email, coming down here to the 2012, the 1970, 1973 projection is right here. The SPX April range is 310 points. The new moon window closes on Friday. I made a big mistake by putting that out there because I sat there and I thought about this last night after the market closed. I said, you fucking stupid idiot.
When he looks at the podium, he's boxing heavy, so of course he's paid special attention to that. Last time we saw him, of course, was against Islam Makhachev, when he stepped up on short notice.
The new moon is on May the 7th. That's Tuesday of next week. The new moon window opens tomorrow, Friday, actually today, Thursday, Friday, Monday, 3 days prior to the new moon, and then the new moon, and then 1, 2, 3 days after it. So starting today into the end of next week is when the new moon window, plus or minus 3 trading sessions, is open. Why I put that it closed on Friday, I don't know. But the reason I'm mentioning this is when you come over and you look through on your new moon, let me stick with this first. Zoomed in, extremely zoomed in, this is what we're at. This is looking at what we were getting for yesterday. And it does very much look as if it was an A wave. That was an exceptionally large B wave. And now the move down yesterday was the beginning of a C wave, which, having this been an ABC and this being a very aggressive one wave move B wave, this C wave should work out to be not the 1, 2, 3, 4, 5 that we were looking at, but instead be a 1, 2, 3, 4, 5 that I'll get to in a second. Being that we have here, again, looking at this as 1, 2, 3, or ABC, an ABC move to the upside, this being now an A wave down, this being a very quick and fast B wave top, again, right to that trend line that I've drawn. What we should see now is this being a wave 1, the wave 2 bounce coming today into Apple's earnings tomorrow, which futures are up 30 points. I would definitely say that this is undoubtedly that wave 2 that we're looking at. And then the bigger, stronger wave 3, very similar to what you see here, how this big wave was enormous coming to the downside here. 1, 2, 3, 4, 5, and we got the C. We should see a 5-wave C wave. 1, 2, this being the start of this, and the big wave 3 of that. 1, 2, 3, 4, 5 should all still continue to bring us down to that 4,800 target. Nothing has changed, nothing whatsoever. And considering that the 200-day moving average is down here at 4,700, let me move this off a second because I've got it adjusted. Considering that the 200-day moving average is down here at 4,700 and it's moving upward somewhere in this range, like we talked about, 4,800 possibly even down to 4630, 4600, fits. It all fits. And now we could actually move, if we wanted to, this trend line, which, to make it more accurate, we will go in there and put it right to the minute, but it all fits. It all fits. So no, I would not be getting bullish. And yes, I will be expecting that Apple eats a bag of shit today. So having brought in where our new moon plots are, this is where the May 7th new moon window would be, right in here, somewhere in the course of the next week plus, starting from today into the end of next week. It fits. You can see it clearly here without even knowing how Elliott wave works. It fits. It fits that we should be coming down into around that 4,800 region somewhere in the course of the next couple of weeks, most likely over the course of the next couple of days, because that wave 3 move will be the aggressive move to the downside. Looking here on the SPY chart, again, it fits. Got your first big wave down, your A, here's your B, and then with this being that we will be going into the C, we should be coming down somewhere around that 480, 475 region, highly likely as we go into that new moon window, and then we progress into the OPEX week and heading into Memorial Day before summer starts. Just same thing that we've been talking about, but that's the view that we've got. Looking here onto the futures, I'm looking here at 10 days so that we can see a wider view of how things are progressing. And it's very clear to see that nothing is bullish. But it's also very clear to see that nothing is aggressively bearish like it was going back into April 18th, where we bottomed out. But what you're seeing here, you're seeing some pretty aggressive sell downs. That's what is not indicative of a bullish start to a rebound. Absolutely not. Looking here on the NQ again, below the 100-day, below the 20-day, below the 50-day. Again, even though it was all in the NQ and we talked about the NQ and the QQ getting up there into that 433.50 area, that aggressive sell down to the downside yesterday, it only emphasized the view that we've continued to play, which has always been shorting these tops. And you see here on your minus 5% level, coming up there, getting rejected constantly, not indicative of a bullish start. Over here on the ES, again, the same thing. Yes, we are producing higher lows. I will not take that away. But again, there's nothing out there. The only way that the bulls even start to have a little, tiny little bit of control is to start closing above the 20-day moving average. That's the only way that they will regain any kind of control. And considering what's coming up later on tonight, I don't see that as a big possibility. So I'm going to leave you off here with Apple. Looking over here at my main 8 that I have up on my lower left in my center screen and bring you to Apple. And on Apple, I don't see anything super fantastic. Zoom out here, looking at just what we've got. You see Apple having retraced down here to this 164. 164 back here on April 18th, April 19th. You come out and you look at that 164 and you see, you've got a little bit of information here, but just deal with it. You see where you're at. Now come out and zoom out a little bit stronger. You see how your highs were placed here back in December while the market topped over here in March. And here's your highs over on Apple. Apple, big heavyweight granddaddy Apple. You topped over here in December. And here the market topped over here in March. Apple, big move to the downside, down to that 164.08. So we'll zoom it out. Zoom it out. That 164.08, when you bring it down, you took yourself right down to those October lows. And again, with this being Apple, let me move this off. Equities, contract corporate actions. That should work. Nope, that's not the one. Show the corporate actions. Price axis. I know where this is. I've done it before. Come on, man. You're a fucking idiot. Rollover lines. That's what I was looking at. Show options expiration Friday. There. That's what I wanted to get those lines off. This is big because this 50 retracement line that you're coming down to is coming down to the January lows, right down here at 161.90. Now there is some pretty significant gaps down here, but you are starting to break down into some very big areas over here on Apple. And they're not good. Not good, not at all. So Apple shits the bed today. I'm looking around that 153.78. Not good. So Apple's going to be reporting after the market closes today. And again, like I said, going through yesterday as I shared over there with everybody in the alert room. Thank you all and hope the pre-guidance helped you out with your involvement today. FOMC days are absolutely chaotic, but we crushed it. We nailed it. We absolutely fucking nailed it.
If you want a good time, if you want a good time, let me hear you say, hey, everybody say, hey. If you want